Good day, all. Ira Epstein of Linn Associates with your financial wrap-up, and we are sitting here now on Monday, the 15th of July, 2019 at 4:40 p.m. Central Daylight Time. Well, I'm tired of saying it. Another day, another set of new all-time highs. It gets a little boring. We did see a little change today in that we're getting the first reasonable bounce in the bonds and the notes as the market is now, just setting back from last week's testimony of Chair Powell. We did see strength in the metal markets. In fact, at the end of the day, silver was really knocking on the door of the highs, and the gold was way higher than this. We're seeing what I call flubba-dubbing back and forth in the currency markets is they're going to wait for a lot more data, and we get a lot more financial data in the U.S. tomorrow. And then, of course, we're in that time frame now where we're just 2 weeks plus before the next Fed meeting, where we'll find out if the Fed follows through with the rate cut the market is fully pricing in. Tropical Storm Barry, it did become a hurricane for hours, but it's really a tropical storm is how it had to be described, I think. The fact that it hit hurricane, that means the name Hurricane Barry is going to stay. Did not have the lasting impact, did not do the damage that it could have done, did not impact the refineries from what we're seeing, nor the offshore platforms, so expect everything to get back up into play in those. Now, when we look at the stock market, you can see it just keep running to the upside to a new all-time high close. The market is in a clear-cut uptrend to the upside. Everything gets a correction eventually, and we do have earnings season right in front of us, so that could set off some profit taking at some point. But the pattern hasn't changed since the June break. And I was laughing last week because I was on Fox twice, back to back. And people are talking the break in December. What about the break that you had from May into June? And had you owned the market here under the 2,800 level, you're back up over the 3,000 level. That's a year's move by itself. And it just happened with us. So now the question is, now that you're in the second part of the year, when you make those type of gains that we did in the first part, from the second part, it's typical, I didn't say it has to happen, that you gain in the second part of the year. The question, of course, is how much will it? And that's the big question. Will it? Don't know. Past history does not guarantee the future. We all know that. If it did, boy, we'd all be phenomenally wealthy. But this market keeps running, and the number you don't want to take out is 29.9250. We're well over the 18-day average, which in theory would offer support if the market broke through that number back at the 29.70 level at this point. In terms of a resistance number, well, the upper Bollinger Band. Each time the market's hit it, it's backed off, and you can see that. You didn't quite hit it there. So the most recent times are here. Since June, that was the only time you hit it, right into this early July period. Will it hit it again, or is it going to be backing off a little bit here? That's the question. On the chart, none of this is bearish. This is all still bullish, as well as momentum has locked in today into that embedded reading where you have both the K and the D lines that make up the slow stochastic oscillator. Those two lines are going sideways over 80 for several days now, and that means they've changed the course of the market to one where you'd expect that the pros are buying this market until the red line closes under 80. And if that happened, you would expect that price and the 18-day average make a run at each other. Now, in so many markets, we've seen that, but we had that happen right here before July began, and while the market broke on the news, it didn't get to that 18-day average of closes, which when it happens like that is often a sign of strength. If you were coming down and going up to the 18-day average and didn't hit it, it's a sign that the market's a lot weaker than you think. The NASDAQ has done all that you can ask for it in terms of getting to the upper Bollinger Band and just hanging out there now with the embedded reading as well. Unlike the S&P, though, you have a pattern of a lower low, higher high. Not as pretty a chart as one where you keep getting these higher lows and higher highs. In the Dow Jones, you're in the pattern of higher lows, higher highs. Now, this market's a bit excessive, so it sets up the potential for the Tuesday reversal. And I say that because you're up and over the Bollinger Band. See the black dashed lines? These are the Bollinger Bands. The theory of the algorithm of a Bollinger Band, developed by John Bollinger, by the way, is that the market will trade within the bands 95% of the time. Therefore, when you get consecutive closes out of it, I As a rule of thumb, that's all it is. I take each one of those and subtract it from that 5%, so it gives me a 3% chance of staying over the Bollinger Band. That doesn't mean the market has to top out. It means I'm expecting prices to back within those Bollinger Band numbers. In the Russell today, the market, number one, is worked off an overbought condition. Still isn't pointing higher in momentum, is not. Yes, the bias is up, and yes, the market has fought a battle for about a week now between the 100-day average of closes, the green line, and the 18-day average. And you can see how the market's trying to hang in here, but it's certainly not as spectacular to the upside as the other indices have been. At the same time, the VIX is refusing to go down to the lower Bollinger Band. Now, my theory is that if the market goes to the lower Bollinger Bands, the pros are writing puts in it when it gets there, with the idea that the market will get back to the 18-day average of closes. The lower the market goes, and when they write that put, if you think about and go back on the chart, which I don't want to do at this point all the way back, you develop layers of support. The 8 to 10 range, very supportive. So at 11.64, they'll say, well, what are the odds of this market just shooting up and keep going? That will be what they do. It's a lot more risk to write it at the upper band, but you haven't been hitting those because you'll be hitting the lower bands in a bear market and getting the corrections off of the stock market as it pulls back in this bull market. In T-bonds, I'm not surprised. All we've done is go from the upper Bollinger Band to the lower, and now we're getting a kickback over that band. We also do not have a pattern to trade. You've got a higher high, lower low. That's ugly. Oversold condition. That doesn't tell me much of anything. Not even trying to convert itself to embedding. So I just call it a roller coaster ride here at this point. In the 10-year note, a little better looking of a chart. You've got the lower highs, the lower lows. If the pros are taking off, and I think they're doing that, as they get a chance on rallies to sell the market, they're coming out against the lower Bollinger Band. But now you're in this oversold area, and the question is, what do you do with that? And again, it's not trying to embed. In TLT, the trend of this one was the easier of the whole group. When the market took out this low right here, the goal was the lower Bollinger Band. Yeah, it slipped through it, but it's come back nicely off of that anyways. I still look for resistance up at the 18-day average. However, I don't think the pros will get overly aggressive here because you're so oversold in these markets. Then we get to the dollar index, which finally today made a run for the 100-day average, the green line. Momentum is pointing down. The bias is up and you're out of a trend. It needs some information or something to react to before it's going to probably make a move of any type. And the eurocurrency is still very much in the downtrend area. Lower highs, certainly the lower lows, although with today's action, I can argue you got a higher low. So I have a market that's pausing for the moment in an oversold arena. Now, if this market can clear the highs of last week, which were 134.40, well, that can change the pattern suddenly to one of higher lows, higher highs, but you'd still have resistance right here into this 113.65 level, and if you cleared that, then the 113.85 level. Those two numbers. Where's the market going to go? Don't know. If it takes out this low, you're reestablishing in a pretty solid way the bearishness, although you are oversold. In the British pound, the market's void of trend temporarily. You know, we're getting closer to whoever's going to be the next prime minister, and they keep having the debates between Mr. Johnson and Mr. Hunt. But it looks as though Mr. Johnson's going to get the nod, although he did say today that he would not join the U.S. at this point in a war against Iran. Well, that's okay. Let's see how many of the UK ships get attacked by Iran and what he does later. Lower highs, higher lows, the market sort of oversold at this point. But if you can get up and over the highs of Friday, and that number was 126.17, you put into play the 18-day average of closes, and should the market close over that number, then the game gets interesting because this market starts picking up momentum to the upside. Doesn't answer the Brexit question, but we are going to know very soon who is, I think it's another week away, if I'm right, who's going to be the UK Prime Minister. In the Japanese yen, you got up today to 93.20, so you took out this last high. So you have higher lows, higher highs, but the bias remains down because you're closing under the 18-day average, which how often have you heard me say that's the line in the sand? And you can see how this market's been fighting a battle here since the end of June, right through here. It's almost 3 weeks that it's been fighting at that number. Bitcoin down. And what killed this market was the testimony of Fed Chair Powell and the questions asked by both the Senate and the House in their committees. And as soon as you heard the Fed say negative things about the cryptocurrency, and they'll have committees or agencies within it looking at it. And today you heard our Secretary of the Treasury come out. He did everything he could to basically, without saying it, this thing's not going to pass anytime soon, this Libra idea of Facebook in the United States. I can't answer what it'll do in other countries, but it's not going to work here right away. Money laundering, the different rules. Is it really going to be a financial institution? How stable is that? There's so many questions. So the market's in its corrective phase. That's what you've entered. But today was only part of it. You were like this Friday. So you actually had higher lows, higher highs, and you were challenging this number. This today is the day it gave in. So now you're in a downtrend. You have the potential to get back to the 9,100 level in here. Resistance back at the 18-day average of closes. In Brent versus WTI crude, well, now you're seeing Brent gain on it because we're going to see our production come back. Our Hurricane Barry has ended for all practical purposes, and the market did not see a lot of damage from the storm. Now you have a pattern of lower highs, lower lows. The resistance was seen last week, and you know that. We were talking the 100-day average to the upper Bollinger Band. This was Thursday's action. This is Friday, and you don't know what the storm's going to offer. Last night I was surprised to see the market up because the damage wasn't there, and by the end of the day the market had basically given that up. I still see a lot of resistance between the 100-day and the upper Bollinger Band. We get the API numbers tomorrow afternoon and then EIA numbers on Wednesday morning. They could be supportive, but now the market's got a pattern that is not supportive. When we come to WTI, not supportive. Lower highs, lower lows, back to the 18. So both the Brent and this are both backing off a little bit. Gasoline down today, almost 400 points, 4 cents. Support's way down at 184.70 to 182.90. I think this rally was storm related more than anything. And if we take a look at momentum, on Friday, both numbers were over 80. They were both over 80 on Thursday and both over 80 on Wednesday. If I go back, both over 80 on Tuesday and Monday. So for the first time, you don't have that. That often leads to price and the 18-day average, since it's the closest of the main moving averages, at making a run at each other. That's what I think is going on here. Excuse me. Nat Gas never did embed. It's just overbought. Now momentum's turning down. You've turned down the swing line with lower highs, lower lows. If the market breaks from here, support could be seen at the 18-day average of closes with resistance 24.86. But again, I think the storm impact is come, gone, and that's what you're dealing with. You know, if you like what I do here, why not learn to do it on your own charts? And our charting software is such that it'll work with you and you can set up what you're going to do from there. You're going to learn swing lines. All the moving averages I use, you're only seeing a few of them when you watch these videos. Then the tricks I use with slow stochastics, how they work in detail teaching. Then Bollinger Bands, all the parts I know of that. Window envelopes, a study we don't even study in any of these videos. It'd be too many lines on the chart for you. But think of it this way. You get your 18-day average, you get support and lines under and over, and they run parallel to that 18-day average. It's very different than pivot points. It's very different than Bollinger Bands, how they work. And these offer resistance on the way up, support on the way down. So it's another tool I use because when a market's moving in a direction, you want to know what to do with it. And you'll end up with charts that look something like this. You'll have one of the averages I teach here, another one here. There's actually about 4 or 5. And then intraday moving averages and the rules as to how to use those. I promise you, it's simple. In fact, the way I teach it, I take the name of the chart off. And the idea there is a chart is a chart is a chart. I don't care if it's a stock chart. I don't care if it's a chart of real estate values. If you can plot it, you can put these studies on it. If you can put the studies on it, it's a way to read whatever a chart is. It's videos. So there's 55 videos or so in it. Each one probably about 10 minutes long. The idea is you take a chapter at a time, you go through it, you make sure you understand it, and you move to the next chapter. The logical thing for you to say is, well, Ira, if I see what you do and do all that, means I'm using, where do I get the data to do exactly what you did? We include it with our charting software. Then what? In the morning, I include my morning subscriber video as part of this, so you get to see how I explain to you on current charts that you'll also have what I'm doing so you can see it. Now, when I say what I'm doing, how I'm analyzing the charts for you, what I'd recommend you do on it. In the morning video, I do that. All of it's right there. So now you can refresh it. In the morning video, I don't take it off to the next day. So you've got all day to review it and away you go with it. You'll also get my written market access, my oral updates that come with it, the charting software. You know, the charting software, I was just looking it up this morning, I said, or earlier I said $79.95 value. It's really a $99.95 value, plus just the value of my research. The full research is $60 a month. So by themselves, it's about $170, and that's about where we price the charting course with all the videos and everything else in it. That includes, by the way, your pocket video, your pocket mobile QT platform for either Android and or the iOS system of Apple. Away you go. How do you find out more? You can call my staff. The best way is really to go to the website, and under the word education, Ira's charting course. It explains what you need, and away you go from there. Take the rest of the summer. Have a few good points of it. The way I teach is step by step. If you like what I do here, I think you're going to love the charting software. In any case, I'm Ira Epstein. Hope you take advantage of this. I'm Ira. You have a good day.